Well, there's a few things. Number one, obviously, is the vaccine news and the fact that Pfizer has come out and said that it's extremely effective. And now AstraZeneca came out and said their vaccine is extremely effective. And today we had in England, they're actually starting to give vaccines. So people are still looking very forward that as we get into 2021, people will feel better about going out. The shutdown will finally be over. And I think people have such incredible pent-up demand to spend money. So it's very possible that this might be a little bit ahead of that move. And then also, even though the stimulus hasn't been passed yet, I think even if there's some sort of a stopgap that's put into place this week, then when Biden actually does become president, there will be more behind it. And quite honestly, at this point now, it's feeding off of itself. The projection growth in the United States in terms of the manufacturing is still pretty good. If you look at the Russell 2000, which has been leading the market, that's reflected there. And also emerging markets, I think, is something to be looking at for 2021. So all of this with a low dollar, low interest rates, and the Fed still playing behind the scenes. This is the reason why the market hasn't gone down yet. Tech may not necessarily be the big momentum plays, but surely tech was still going to be good, especially if the market holds up. You're not going to see the big tech selling off. But on the other hand, even though there is buying in the tech, it's still not in the classic big tech. They've been sort of hanging on, like Microsoft, Nvidia, Amazon. They're just limping at this point, where you're getting some of these small cap growth stocks that are exploding. So I think the rotation into the small caps and some of the value stocks is very much alive and will continue to be alive. And of course, there'll be certain areas of tech that will continue to do very well, especially tech that's been more innovative, that's come out this year to help in our sort of new world regime of being able to do business and socially distance. So there you go. It really depends where you look. What happens is resistance becomes support. And now 1850 will now be the new support level. So it's trading on Tuesday at about 1876. If you go back to the beginning of November, it went up to about 1900. So now we're in a new range of 1850 to 1900. If you go back to July, that's when gold went up to 2000. So we keep looking at these in increments. But what does gold mean in the overall market right now is that we have seen a rise as the dollar continues to be weak. And even though Bitcoin was sort of the it move against inflation, people are starting to realize that gold was so undervalued compared to Bitcoin being so overvalued. And that's why you've seen buying coming into gold. And if there's any type of tension, correction, or geopolitical stress in 2021, people will fly into gold. So that's what we're looking at right now. So 1800 should be the bottom line, 1850 more interim support, and now we'll see what happens $25 from now, what happens at 1900. So really, if you look at futures in general, it started with the history of corn, which was a futures designed for farmers to hedge against. So if they had a bumper crop and it meant that prices would go down, they could go short in the futures market. And if they had a shortage of a crop for any particular reason, then they could hedge themselves by buying in the futures market, as that would drive the prices up. And so that's exactly what the water is being done for. It's really being done as a commodity, as a hedge for people who are especially farmers. If there turns out to be water shortages, they can do that. In terms of the regular speculators, one thing you don't have to worry about with the water futures is taking delivery, which is a good thing considering one contract is 3.26 million gallons of water. So that's different than commodities, because if you hold on commodities and you don't roll them forward in the futures, you get delivery. So you don't have to worry about that. So it's going to be interesting to see what happens once it unrolls. And we've been trading PHO, which is a water ETF. We've been in and out of that. We're actually in it now, one of our models. So I think it could be pretty hot. But like everything, always give it a little time to see where it settles, and then you can have at least some idea what your risk parameters are.